Yo, it's Market Scraper. So 2020 has been one of the most incredible years in the stock market. We saw one of the most quickest drops, followed by one of the most quickest recoveries. And I wanted to reflect about the two biggest gainers in my portfolio and talk about what are some of the reasons why these stocks gained so much. Well, let's get into this. And keep in mind that none of this is financial advice. This is just some random guy on YouTube drawing some stick figure lines on a chart talking to you guys. But before we get into this video, if you get any value from this content, don't forget to put a smash down on that like button. It really helps support this content. And if you haven't already, smash that subscribe button for more content like this. Okay, let's get into this. So Salesforce isn't one of these stocks, but just one cool thing that happened today is that I posted this on StockTwits saying that I was thinking that today it's likely to drop to fill the gap from 1216, but then close above $224.50. Let's see what happens. And so if we see this was posted when the stock was around $223 today and 36 cents. And what happened today? Well, we can see that we had a big drop. And I posted this message probably right around here. And then followed by a constant, steady recovery, essentially, back up, and we ended up closing today at $224.64. So in fact, we did close above the $224.50. But why did I say $224.50? So that goes back to over here. So I drew this line. This was part of my last update here. And where does this $224.50 come from? So I was looking at this line here, where this line exactly is. And basically, out of all of these lows here, it's the lowest denominator. And that actually is this candle right here, which is $224.50. And I mentioned this in my last update that I thought that this is an important line. I thought intraday, actually, the next day, we literally would go down, fill this gap from the 16th, which we definitely did, and then actually close above this line here. And that's exactly what we happened to do today. So that was pretty cool to see it play out exactly like I thought it would actually happen. So anyway, main point, if you want to see these kind of updates on StockTwits, definitely check me out over there. So it shouldn't be surprising that Tesla happens to be the stock that has gained and appreciated the most for me. And right now, in one of my accounts, in another of my accounts, it's actually over 1,000%, but in the account that I'm looking at right now, it is up over 940% at the moment. So this is a pretty impressive appreciation in a pretty short period of time. So when did I jump into Tesla? So I jumped into Tesla at the end, I believe, of 2017 and kept accumulating slowly, but really started to ramp up my position when we had a big drop in 2019. So this is really when I ramped up my position in Tesla stock, and this has been an incredible ride to say the least. This has been a interesting ride in that in 2020 early on, I think in February, we had a massive rise and then a massive crash. This was an interesting time period because this drop here in the middle of 2019, a lot of folks jumped off the Tesla boat here. And for those who managed to hold on here, did very well. But I also noticed a lot of folks jumped off Tesla right around here. And so if you were able to hold on and you had the balls of steel to manage to be okay with this drop here and ride this all the way up, this has been an incredible move and a historical move as well. Now, do I think Tesla here will double and triple from here? It will eventually double and triple at some point, but we're talking about years, if not decades, for this type of price action to happen. I don't think that we're going to see a move quite like this ever again within Tesla stock. I think it's going to be a slow grind higher consolidation. There's going to be moves to the upside on catalysts, but we've had a historical run here. We are already at a market cap of over $600 billion. So doubling this would put us in the trillions of dollars in market cap. And I absolutely think that Tesla will be in the trillions of dollars at some point. But when will that happen? Will this stock 10x from here? I don't think this stock will 10x from here anytime soon. And I think that's a bet that is not necessarily in your favor if you think that this is going to be another 10x company from this point moving forward. Can this double, triple, and maybe even quadruple in the foreseeable future. I think that is definitely possible, but definitely just at least temper your expectations for what Tesla will do from this point on. Now, the other company that's actually the second most appreciated company in my portfolio is actually Crestwood Equity Partners, CEQP. And this stock here, I actually bought it this year. This stock I actually purchased right at the end of March. But first of all, what does this company do and what is this company? Well, to get to brass tacks, what this company essentially does, they engage in gathering and processing, treating, compressing, storage, and the transportation of natural gas. And in addition to natural gas, they do it with crude oil and then also with water. So these are the things that they do. And a few things with this company is if you look at the stock here, we were at a price of over $30 a share earlier this year. And then we dropped all the way down to $3. This was an incredible drop. This literally was screaming, we're going out of business. And we saw this in a lot of other spaces as well. In a lot of REITs, we saw this happen. In oil stocks, we saw this happen. So this was something that was more of a play on the risk to reward ratio that I saw. First of all, when this was down at this price, I didn't buy it right here. I was buying other stocks on this crash and on this move right here. A lot of other stocks actually bounced back pretty quickly, but there were REITs, and including this stock here, that was not bouncing up for a little bit of time. We had up until in the beginning of April, actually, to really buy into the stock at rock bottom prices. This was a very significant and generous space of time here, unlike other stocks that kind of just started to bounce up pretty quickly right away. Like Tesla and other stocks bounced up pretty quickly right away. So this stock here, I probably started buying this stock actually on March 27th. And one of the reasons why I bought this stock, you have to be aware of dividend investing, and the concept in the first principle there is to not chase yield. You don't want to chase yield because let's say you're in a regular market, there's no recession right now, you're in a middle of a bull market, and you see this company that's struggling a little bit, that's been falling in price a lot, and that has a very high yield. Well, the question is now, is this a good time to jump into this company, or are they risk at cutting their dividend, or even if a recession occurs, will this business that's struggling in the best of times right now, will they go under, and will this be basically wipe out my equity? So this is some of the things that you have to think about, but I also believe in chasing yield. So you can't just think of the main principle of don't chase yield, because I totally believe in chasing yield. You just have to be smart about it. This stock and chasing yield was what I was completely thinking about for this stock. When we were down here, we had a yield of literally like 47%. This was not a sustainable yield, but there was a few assumptions that you had to make. Could they cut their dividend by 50%? Yeah, sure, that was definitely a possibility. But the cash on hand in these companies, there were a lot of companies that were out these levels down here, a lot of REITs as well. Commercial REITs definitely were down at this level for quite some time. And I did buy some of those stocks as well. Because of their dividend and because of their cash on hand, these stocks were not really at risk of going bankrupt in the immediate future. And just thinking about what the government's going to be doing to potentially bail out these companies as well, you basically have some level of safety and support. But in addition, what are the risks to reward? We're not talking about being in the best of economic times and the dividend yield being so high and the risk of already going bankrupt is already existing. These are companies that the stock market is saying they're definitely going bankrupt. Yet nothing's changed fundamentally with these companies. Also, this company in particular, it's like we're going to need to have natural gas. So we're going to need to have crude oil. We're going to need to have water. These are things that we're going to have. Now, could there be a delay on these things? Could we wait a little bit time before these things are back into production? As demand wanes a little bit, will production wane a little bit as well, possibly? This is possibly the scenario. So basically, it's a recovery play. It's not looking so much into the future if you're just here now seeing this crash here. And this crash definitely could have been a mechanical crash. It could have been just a lot of, this is just so much selling and so quickly and so drastically. So this was a calculated risk essentially, and at a dividend yield of 47%. Let's say they just stick around for a couple more years. That is essentially going to pay off my equity. essentially, like if I had a 50% dividend yield for holding that stock for 2 years, that completely covers whatever equity I put into that stock. For example, this was 47%. So that would essentially be almost 94% back of the initial equity that I put into the stock. Obviously, I didn't put my house and all my money into the stock. I put a appropriate amount of money into the stock that I saw in terms of the risk to reward ratio, but I didn't see this as a super high risk, and it seemed very attractive. These type of plays, it is sometimes interesting to jump in, go for these high yield plays when you see these inefficiencies in the market, when the market is acting irrational. So be aware of this. Well, I'm going to end this right here. I hope you guys got some value from this content, and if you haven't already, smash that like button, subscribe to this channel for more content like this, and I'll catch you guys in the next one. If you want to support this channel and get an amazing brokerage, here's my referral link to Etrade. I also included in the description down below, and Etrade is just an amazing brokerage. I definitely like Robinhood as well, but Etrade is definitely something I feel more comfortable with promoting for newer investors and for experienced investors. It's just a solid platform with a lot of resources. I'm really into Robinhood as well myself, but I know that it's easy to not be as disciplined with Robinhood, so I feel like you gain your discipline with Etrade, with that platform, and then go into Robinhood and knock yourself out.